Welcome to another RES Wave update. Okay, so this is just an update on what Bitcoin is doing, and it's basically just following exactly what I was saying in the previous Bitcoin idea, where we're in the beginning of that move that's going to take this thing to $200,000, in my opinion. And I'm seeing all of the signs; they're still there, and I don't see anything. Haven't seen anything changed. I did say we're expecting a D wave. Now, D waves are that particular wave where it's still corrective, but however, it can definitely start looking like an impulsive move. Okay, so don't be surprised if you see. I don't know. At the moment, what can I say? The C wave doesn't look as long as the A wave yet. This could still be within a corrective process. I will go down to the lower degree in a moment, but as I've mentioned before, right, when it was basically around this area, I said that this is basically going to, end the correction here. It's not going to go below 42,000, area, and surely enough, it touched the 0.718 retracement and then basically reversed. So that's a bit of evidence that the count is right, and so far it's doing exactly what I said it would. Okay. um, and I think someone commented and said, well, if the C wave goes below the previous A wave, does that mean that the count is invalid? No, because there is no rule to say within RES wave, there is no rule saying that the C wave can't go lower than the previous A, and that goes for any wave, right? There is no rule against that. So typically, in a pretty normal sideways correction where it's every wave is kind of, there's no one wave that stands out being the biggest. Well, in this case, you could say that the C wave was the biggest. And that's fair enough. It's a C wave. C waves are generally pretty sharp, and they can look like there's some kind of reversal happening, and that usually catches a lot of people out. But that's simply because they don't know the overall structure of the wave. And yeah, so basically, the D wave is one of those waves where it starts to look impulsive, and it may give you the impression that it is impulsive, only to then give you a sharp, like, just say for example, like, I need to go into the smaller degree to really understand this pattern right here, but just say for example that this one here is an A wave, and now we're seeing like like a B wave that's sort of within that uh, B in brackets correction. You'll see an A, B, C, D, E, and then you'll get that move that looks like it's going to go up. uh, and it starts looking like that's the start of the bull run. But then you'll get the E wave that could potentially come back down either to the midpoint, or it may not even do that. It may just, I suppose, retest a breaking of that trend line, which I drew in, basically when this was on its way down. And it doesn't really matter. This is not 100% meaningful, but I suppose in hindsight it may be meaningful. But either way, it's kind of like the correction's not over yet until you see that E wave dip. Okay. So understanding how the waves operate, even internally within the zigzag, is critical. Not only the entire correction, but the corrections within corrections, right? And this is something that RES wave is totally, basically, it's the main reason why RES wave is the most effective wave methodology, I believe, on the planet, is because it focuses not only on the correction, but the correction of the correction. Because within every uh, corrective wave, there's also a correction, right? That's why you see a zigzag is not just a move that goes like this. Okay, that's not how the zigzag actually works, right? And same here, like in the B wave, okay, you may look at this and say, okay, well, I can see a 5-wave move and then what looks like to be a 3-wave move and then a 5-wave move, but that's not right. Okay, the thing is, you're not paying attention to every single wave within that structure, and where does the impulsive move end and where does the correction begin and where does the correction end, and what are the waves that are in there. And once you learn RS wave, it actually becomes quite simple, and that's the whole reason why you can use it to sort of gauge where you are, because you can pick out a wave and you can understand its behavior and what you could expect after that. So as I said here, this particular wave in Bitcoin looks like a 5-wave move, right? Whereas in XLM, for example, it was a CDE pattern. So there was a few waves in that same, you know, in the time that it took to create that move. Here in Bitcoin, you got one wave, but in XLM, it turned out to be 3 waves, which is why you can never just say that the markets are producing the same patterns, because they're not, right? You may think that and it may look like it, and you can try and wrangle it and, use your confirmation bias to say that they're the same waves in all markets, but they're really not. So I'm going to touch now on the D wave here, because it's easy to assume that this could be like an A, B, C pattern, right? It's easy to assume that. But then you're going to get other stuff happening and you're going to be thinking, oh, what's going on? And that's a very common thing for people to sort of assume. So that means I've got to go to a smaller degree. And then I'm going to look at, first of all, where did the first uh, impulsive move end? Right. Now, it's not always easy to do at the small degree, so I tend to sort of stay away from trying to include this type of analysis in my ideas, simply because it's very easy to get them wrong. Unless you spend like a lot of time fixated on one particular wave. And to be honest with you, it's time consuming, and, we have busy lives, right? So it's not always ideal, but just having a quick look here, I can see straight away that there's a zigzag right there, right? And as I mentioned before, a zigzag has 2 5-wave moves, but then within that, you have other stuff going on, right? And that's the part that gives it away to me, because I know RS wave tells me this. So therefore, I can assume that corrective pattern ended here, right? So therefore, this is the beginning of the B wave in brackets correction. So that means that this is going to be an expanded D wave, right? So that means that this is actually a B wave in progress. Okay, it's the same deal, right? You got a 5-wave move, and then you're going to get another 5-wave move depending on where the B wave in brackets ended, right? And what can I see here? Potentially a zigzag, potentially another zigzag, and I suppose we just need to see more price action, right? I'm only doing this because it's sort of just like giving me the clue that no, this is not going to be the end of the D wave yet, because we haven't seen certain waves unfold in order to draw that conclusion. And even though this wave may look, large and, like it could be impulsive, the waves themselves give that away. So you can't get that wrong, right? And once you understand Arias wave, you understand why I believe that that's the start of the B wave in brackets correction, is because this particular wave can only happen in this position, right? So RES wave gives you certain starting points for where you start analyzing the correction from. So then you're going to be seeing the C wave in brackets that's going to be roughly this length. And I don't think that this is going to be it. I think that we're still got to see a little bit more choppy price action occurring here. It's still like going to expand to the upside, so it's still going to be making some kind of progress. So even so, like this particular one here, it could potentially be the full correction. More likely than not, it would be the full B wave in brackets correction. So therefore, I'd be looking for something like this particular length to start from here and then produce that similar length before you get a little C wave, right? And the reason why I believe it will be a little C wave is because this thing's got upward momentum. It doesn't really want to there's not much downward pressure. So after that, you might even be looking for another zigzag to the upside, right? In this case, I might even say that it's either going to hit that or it'll break it, and then you'd be looking for your E wave, whatever that could be. There's no rule to say it can't go down back down here, and then you'll get that C wave move that'll sort of be the same length as the initial move, and then you'll either get your retest on your E wave, and then once you break that, that's it. That's when it keeps going higher and higher and higher, right? That's where I can then put these labels like that, and then call that the end of wave 2 for the entire move that started, a couple of months ago, right? So it could end up looking like this, and then that's where you move your, just lock that in place so it doesn't move. You put your wave 2 here, and then that's the start of wave 3, and that's when it goes parabolic, right? Because it's wave 3. Obviously, wave 3 is not going to just, mess about. It's going to go straight up. So this is how it can begin to move. And I've already mentioned before that this is exactly the same sort of pattern that we saw at the beginning of the A wave in brackets, right? Which, if you go back to, I'll just mention it one more time because it's just the same thing. These are fractal patterns. I mean, once you figure out what's going on and when the B wave in brackets ends, then it's easy to sort of assume this sort of stuff. The problem here in the beginning was understanding this part of the correction, which was completely expanded to the upside due to the surging popularity in Bitcoin, and also, you could say it's a high profile investors and, I suppose, institutional trading that made this D wave expand like it did. So to see the D wave do that up here in wave 2, it doesn't surprise me at all, right? It could start looking impulsive, but those are the sort of the fake out waves. Now, if you're just owning the underlying coin, that's fine. If you're margin trading, you got to just be careful when you're trading these type of things, right? I suppose if I was going to put a long idea for margin trading, I'd wait till we broke the high and created the D wave first, and then waited for the E wave and then the break of the E wave. So that pattern up here, the one A, B, C, D, E that you're seeing, is the same thing that happened, as I've mentioned before, back here. We had your wave 1, A, B, C, D, E, before you started moving up. And as you can see, after that E wave happened, it didn't just go straight up. It kind of just went sideways, but it was actually just getting ready to pop. So you'll notice that once it actually got to the point where it was actually around the start of wave E, it just took off from there because it's basically like a bullish signal. So this is the beauty of that kind of analysis. And then it went straight up. So, in terms of time-wise, the A wave in brackets, looked pretty sharp, sort of relatively sharp. but that doesn't mean that the C wave won't, you know, I suppose it's already taken its time. We'll just start basically heading up towards, you know, that target of 200,000, right? That's the sort of thing I see happening here, which is why it's not hard to believe that XLM is going to $50. I mean, if, like I've said this many times, if Bitcoin can go to 200K, XLM can go to $50. Okay, this is a big bubble. It will pop. We will be definitely trying to pull out our, take profits at this area, whether it be on Bitcoin or any other target that we have on other coins. But the trick is to know when to get out of the market, right? It's very easy to know when to get in. A lot of people take profits early and miss a lot of the run. This analysis is designed to give you a realistic view of the target, right? And as crazy it may sound, like, we haven't seen the C wave in brackets yet. We've seen corrective pattern. It's called an expanded correction, right? So all in all, even though it's expanded, well, it is totally expanded because I call this, like a type 1, no, sorry, type 2 expanded correction, because the E wave ended nowhere near the end of A wave. It actually did this, right? All the way up there, like that. So that's totally expanded. When you have a type 1 correction, typically you'll see any kind of expanded wave that went to the upside come back down to roughly the area of the end of wave A. Okay, so this is obviously showing that there's a lot of strength in the market. So seeing this extra move to the upside, it's really no surprise. And it's something that I believe is going to happen soon, and it's going to be the catalyst for a lot of other moves that are coming in altcoins. So I just thought I'd give you that update. Hopefully you found this video interesting and informative. Thank you for watching.